Listen up, because the way secondary market trading is hitting private assets right now, it's shaking everything you think you know, and it's messing with your money in ways no one wants to admit. You've poured sweat, time, and brain power into building or backing companies, locked capital in, expecting those returns to grow in some stable, predictable way. But the secondary market doesn't care about your plans. It trades those stakes like they're poker chips, flipping private asset values on a dime. And if you're not paying attention, you might get crushed without even seeing it coming. Here's the brutal truth. Liquidity in private equity used to be a luxury. Investors accepted that money's stuck for years. That was the price for outsized returns. Now, secondary trading rushes in, and suddenly your stakes can be sold off anytime, anywhere. That anytime means prices become volatile, detached from the actual progress your company's making. Fear and speculation drive prices down. When insiders or early investors dump shares fast, it sends shockwaves through valuations. You're forced to reassess your asset's worth, not on fundamentals, but on what random buyers might pay on a shaky market day. It's chaos disguised as opportunity, and if you let it, your whole asset base erodes, slowly, silently, dangerously. Stop pretending secondary market trading is just a side tool or a neat liquidity fix. For founders and investors who treated private equity like a sanctuary from public market madness, this shift feels like betrayal. The valuations you once controlled through carefully baked-in growth are now hostage to short-term market jockeys. And that isn't just frustrating, it's terrifying. Because when your valuation tanks on someone else's terms, your negotiating power diminishes, your credibility with future investors drops, and your entire capital raise strategy can collapse. But here's the thing. This doesn't have to be a death sentence for your business or your portfolio. If you want to fight back, with teeth, you need to stop reacting and start controlling the narrative before the secondary market even gets near. First, build transparency inside and out. Don't hide deal terms or potential liquidity events. Make your investors part of the story before outsiders rush to sell. When everyone knows your real numbers and roadmaps, speculators lose their edge. Then, be ruthless about your shareholder agreements. Build strong rights around first refusal and tag-alongs to block fire sales that tank your value. If your structure is weak, you're sitting ducks waiting for a bloodbath. Next, think beyond traditional valuation models. The secondary market thrives on undervaluing assets that don't fit immediate liquidity needs. Use data that actually shows how your company grows cash flow or strategic value over time, not just short-term trading multiples. Show your investors and board real, hard proof of long-term upside that drowns out those panic sellers. Push for independent third-party valuations to counter what the market tosses around wildly. This creates a price floor and keeps speculative drops from becoming the accepted new normal. And finally, learn how to operate your investors like a chess player, not a gambler. Know which partners can hold, which ones might panic, and how to bring in the right fresh capital at the right time to seize control of the share register before others panic sell. Syndicates can be your weapon if you activate loyalty and strategic patience, not just your risk spreaders. If there's one brutal takeaway, it's this. The secondary market isn't just something happening around you. It's a force challenging the entire idea of private asset value. Ignore it, and you lose control and money. Fight it with transparency, legal toughness, smarter valuation, and investor savvy, and you reclaim the power to shape your own fate. No one else will protect your stake like you will. Don't watch the market dictate your terms. Grab the steering wheel, set the rules, and flip the game before it flips you. Subscribe to our YouTube channel and open the featured link to learn more.